reported on balance sheet. So I'm just going to show a table of financial statements. The liabilities section on balance sheet, assuming these are all the liabilities accounts, and I pointed out the ones that we actually talked about in Chapter 10, and here are the ones that we talked about in Chapter 11. Okay, so all of these falls under balance sheet, the liability section, and again, we usually separate the current liabilities from the long-term ones, and we usually list current liabilities first, then long-term liabilities. The difference between the two is having a lifetime less than a year or longer than a year. Okay. So the ones that I pointed out here are the ones that you need to know. Others in Chapter 10, payroll section, the ones that you're not familiar with, that I didn't mention in class, you don't have to worry about those sections. Okay, so for current liabilities in Chapter 10, we talked about accounts payable, interest payable on short-term notes, sales tax payable. Talked about unearned service revenue. Remember, collecting money first and then providing service. At the time point when we collect the money, it's the liability. Estimated warranty payable is part of contingent liability, the possible liabilities that will likely occur. Okay, short-term notes, and there's also current portion of mortgage payable, current portion of long-term notes. The part that we pay by installments when it comes to next year, if it's due, this year it's considered short-term. In long-term notes, as opposed to short-term notes, it has a longer lifetime, more than a year. There's also mortgage payable. Usually it also lasts for more than a year. And we pay little by little, interest expense, principal amount, every single month. Now, bonds payable, the topic that we have been covering since last Wednesday, bonds payable, don't forget that whenever we report it, it's either reported like this at a net of discount or net of premium, meaning this is the carrying amount, or it's reported as the table that I showed you earlier, bonds payable, and then either less discount. You have a summary dollar amount here, which is this, $96,919. It's either reported like this, 2 lines, or like this, net of discount. But either way, carrying amount would always be shown. Okay, so it's not just the face value of the bond, it's also the discount portion, where the premium portion is always stated at the same time in balance sheet. Okay, if it's issued at a par, then basically you don't have this. If it's issued at the face value exactly, it would just be bonds payable and $100,000. But if you see a dollar amount different from $100,000, that basically means the bond was issued at either discount or premium. And you will find the discount or premium dollar amount in the middle of balance sheet.